Hi everyone! So for this video, we will discuss about one method in acquiring property, plant, and equipment. So I hope that through this video, I will be able to let you understand about installment acquisition. So take note that previously, we have discussed about the acquisition on a cash basis and acquisition on account. So of course, installment acquisition is still a form of acquisition on account. It's just that in acquisition on account, subject to a cash discount, it focused on payment on account, which is on a lump sum basis. This time, it would already be on installment basis. So, kabalo naman siguro mo sa ng installment, no? That is, it requires a series of payments such as monthly, quarterly, annually, and others. So, unsa may basis nato when the credit terms is on installment acquisition. So, according to the standard, the cost here of the property, plant, and equipment in the case of installment acquisition would be the cash price equivalent. Okay, so same lang gihapon no sa other nga methods in which we have to determine the cash price equivalent such as on a cash basis. So same thing there is sa installment basis, we have to determine the cash price equivalent regardless kung pila ang actual nga nabayad ni entity. Because kanang actual nga nabayad ni entity, that is actually what we call the installment price. Now, the excess of that installment price over atong giingon nato nga cash price equivalent is actually treated as an interest. So, let's say for example, kung ang isa ka TV palito ni entity worth 25,000 pesos. So, let's say, kung i-cash na niya, that is worth 25,000 pesos. Pero, if ever, nga iyahan ng utangon, the installment price would have a total of 35,000 pesos. So, again, the installment price, if utangon, is 35,000, while ang cash price, if bayaran, dayon, would be 25,000 pesos. So, the difference between that 35,000 and 25,000, which is 10,000 pesos, will now serve as interest. And that interest, for accounting purposes, will be amortized over the credit period. Now, what if there is no available cash price? Then the asset is recorded at an amount equal to the present value of all payments using an implied interest rate. Now, let us have this illustration. So, this is an illustration, of course, of an installment acquisition. So, for example, Credulous Company purchased equipment on January 1, 2019 under the following terms. First is, Credulous will pay a 200,000 down payment. And then, after that, magbayad siya og 5 annual payments of 100,000, and that first installment is to be paid on December 31, 2019. That means after 1 year gikan sa iyahang pagpalit. So at the time nga nagpalit siya, 200,000, 1 year thereafter, or that is at the end of the year, magbayad siya og 100,000 per year. Okay? And that would constitute 5 annual payments. Now, accordingly, the equipment daw has a cash price of 580,000. So, look at this. If you're going to add the 200,000 down payment plus the 5 annual payments of 100,000, so diba, 5 times 100,000, that is 500,000 pesos. That will give us a total of 700,000 pesos. So, this is actually the installment price of the equipment. While the cash price is the one that is indicated, which is the 580,000. Now, question, by how much would the equipment be recorded in our balance sheet? So, again, the cost of that equipment should be its cash price equivalent. So, how are we going to journalize that? So, that would now be a debit to equipment, okay, and a credit to, of course, since na siya cash payment, credit to cash. and credit to note payable. Okay, so again, pila to ang ato ang i-measure sa equipment. As to the equipment, it will be on its cash price equivalent, that is 580,000 pesos. Okay, so pila ang cash? Ang cash ang ibayaran is the down payment of 200,000. Now, pila ang note payable? The note payable is the 100,000 multiplied by 5 annual payments, so that is 500,000 pesos. So, what is now then the difference? So, diba, nag-ingon ta kaganiha nga ang iyahang installment price would constitute the 200,000 down payment plus the 500,000 note payable. So, that would give us a total of 700,000 pesos. Now, since the cash price here is 580,000, so again, naatay na compute kaganiha nga difference, which is 120,000. Now, this 120,000 now is the interest that is to be amortized over the credit term. Now, since dili pa man ni siya pwede nato i-record as interest, since wala pa man human ang tibuok term, meaning kay installment man ni siya, so pina-installment pod ang ato ang pag-recognize sa interest expense. Now, initially, or at this moment, ato pa siyang tawagon nga discount on note payable. Okay? So, that is discount on note payable, and of course, we have to debit it with discount on note payable amounting to 120,000 pesos. So, if you're going to add it, 580 plus 120, that is 700,000, and 200 plus 500, that is also 700,000, which gives us a balance journal entry. Okay? So, if the problem will ask you, how much is the cost of the equipment at the time of the acquisition? It would be the 580,000, which is the cash price equivalent. Okay, so take note that this is the journal entry upon acquisition of the equipment. Now, class, what if tingbayad na? Okay, so what if tingbayad na? Assuming it is already December 31, 2019. So, we are going to make a journal entry for that. So, let's say this is the first installment payment. So, for the first installment payment, of course, mubayad ka og note payable. So, debit to note payable and credit to cash. Okay. So, pila man ang amount sa ato ang note payable? Of course, since we have to pay it 100,000 annually, so we also have to debit 100,000. And of course, credit 100,000. Okay? But it doesn't stop there. Because kay end of the year naman ni siya, and we have here a discount on note payable which is to be amortized over the credit term. Now we also have to amortize then the interest. Okay? So, amortization of the discount. Okay? Or the discount on note payable. So, to amortize, what will be the journal entry? Now, since take note, this is debit. So, kung i-amortize ni siya, pagamyan ni nato because this will now be converted into an interest expense. So, that would be a debit to interest expense and credit to kanina dayon, discount on note payable. Now, by how much? Now, take note that we've also discussed this one now in our intermediate accounting 1, that if there is an interest rate, then the interest expense would also depend on the interest rate. But take note that in this problem, there is no given interest rate. So what are we going to do? So if there is no given interest rate, then what are we going to do is to use the outstanding balance method. Okay? So how do we do the outstanding balance method? So although I've already taught you about this in your intermediate accounting 1, so still let us, or I will present to you how to do the outstanding balance method of amortizing the interest. Okay? So, we need the balance of the note payable. Okay? We have to make a fraction for that for us to get the interest expense that we have to recognize at the end of the period. So take note that here, we are to pay it on a 5 annual installments. So we have year 1, year 2, year 3, year 4, and year 5. So of course, here is the total. Okay, so on sa mga outstanding balance method, we have to determine the outstanding balance of the note every end of the year. So let's say for example, I mean during the whole year. So let's say for example, sa year 1, di ba class, sa tibuok year 1, or let's say sa sugod pa lang, the balance of the note payable is 500,000. And this 500,000 became outstanding starting January 1, 2019 until December 31, 2019. Therefore, on the first year, our balance is still 500,000. Okay, now since at the end of year 1, nagbayad naman tag 100,000. So therefore, pagka year 2, nahimo na siyang 400,000. Okay, at the end of year 2, nagbayad na po ta. So therefore, pagka year 3, nahimo na po siyang 300,000. Okay, now in the year 4, 200,000, and in the year 5, 100,000. Okay, so by this, no, through these balances, we are going to make a fraction. So class, take note that I am going to get the total of all these amounts, but it doesn't mean that 1,500,000 is the total of our note payable. Okay, this is just for making a fraction. Okay, for purposes of making a fraction, but not necessarily mao ni ang total sa utang. Because take note nga, kani siya accumulated, kani siya, I mean cumulative balances na sila. Okay, so for purposes of fraction, ato siyang i-total. So, unsaon man nato, pagbuhat ang fraction, the numerator will be the outstanding balance per year and the denominator would be the sum, which is the 1,500,000. So, for the first year, the fraction is 500,000 over 1,500,000, but to reduce it to the lowest term, we will get 5 over 15. Okay? For year 2, that is 4 over 15. For year 3, that is 3 over 15. For year 4, 2 over 15. And for year 5, 1 over 15. Okay? Now, through this fraction, atoan ng bahinon ang atoang interest expense. Now, take note that the total amount of our discount on note payable is 120,000. So, maupod na siya ang amount kung atoang ibahin for the whole credit term. So, using this fraction, atoan ni siyang i-multiply tagsa-tagsa sa 120,000. Okay? So, we have 120,000 multiplied by 5 over 15. So, we have, 120,000 times 5 over 15. So, we have 40,000 for the first year. 120,000 times 4 over 15. We have 32,000 for the second year. 120 times 3 over 15. We have 24,000. 120 times 2 over 15. We have 16,000. And 120 times 1 over 15. We have 8,000 pesos. So, if we are going to get the total of this one, we will get an amount of 120,000 pesos. Okay? Now, kaning 120, bahino ni nato siya every year. And mao na ni siya ang resulta. So, since this is still the first installment payment, so therefore, in the amortization of the discount, our interest expense would be 40,000 pesos. Okay? That's 40,000 pesos. Alright. Now, class, pagka second year, ana, kanina po na nga ito ang gamiton nga mga discount. And the remaining years. So, panalitan, magbuhat ta sa second installment payment. So, let's say, for example, this is here the second installment payment. Okay. So, of course, that is still the same, no? Debit note payable, credit cash for 100,000 since equal man na siya, 100,000 per year. Where lies the difference is on the amortization of the discount. Since we are already in the second year or in the second installment payment or in the end of the second year, then the amount of the interest expense would now be different because we will base on the outstanding balance table. Okay, so that would be still a debit to interest expense, credit to discount on note payable, but the amount would now be 32,000 pesos. Okay? So you just follow this one for the 3rd year, 4th year, and for the last year. So, kanina po din yung gamiton for the remaining years. Of course, class, ang discount on note payable, every end of the period, magkagamay po ang iyahang balances because every end of the period, matransfer man siya. I mean, makonvert man siya into an interest expense. So, if the problem will ask you, kung pila ang discount on note payable ang nabilin for a particular end of the year, or for a particular period, then you just deduct the discount on note payable that is being converted into an interest expense. Alright, so I hope you get it. And for that, let us have another example. Now say for example, there is no available cash price. Okay, take note of the rule that in an installment acquisition, the cost of the equipment would be the cash price equivalent. Now, what if there is no available cash price? What would be the rule? Now, according to the standard, if the asset is acquired by installment and there is no available cash price, then the asset is recorded at an amount equal to the present value of all payments using an implied interest. So, therefore, kuhaon na to diri karon ang iyahang present value. So, saan man na ron pagkuha ang present value, we will know it later or now. Okay, so let us read the problem first. On January 1, 2019, Enrich Company purchased a machine under the following terms. 100,000 payment, 4 annual payments of 200,000, the first installment note to be paid on December 31, 2019. The fair value of the machine is not clearly determinable on the date of acquisition. The prevailing rate of interest for this type of obligation is 10%, and the present value factors at 10% for 4 periods are 0.683 for the present value of 1 and 3.170 for the present value of ordinary annuity of 1. So, by this time, we are going to make a journal entry. So, saan man ipag-journalize ron, no? So, still the same, no? We will have to debit machinery. Okay? Credit, cash. Credit, note payable. And since this is still an installment acquisition, now whatever is the difference, we have to debit discount on note payable. Okay, but the question here now is, wala tay available cash price. So how are we going to determine now the cost of the machinery? Again, we will have to compute for the present value of, present value of all payments. Okay, present value of all payments. So, take note, class. Wala ako ning padayon. Supposedly, mo ingon kong present value of the note, but it's not the present value of the note. Instead, it is the present value of all payments. No? Ano naman all payments? Because kung mo ingon lang tag present value of the note, then it will only refer to letter B. Ang utang lang. But, accordingly, it must be the present value of all payments. That means, the utang plus the down payment. Okay, so that's why it is called present value of all payments. So, pila man ang present value of all payments? So, we will start first with the down payment. So, pila ang down payment? Accordingly, that is 100,000 pesos. Okay, now how about now? Sa ikaduha na po ta, that is the present value of the note. Okay, so pila ang ato ang present value of the note? Since we are to pay 200,000 4 times, that is every year for 4 years. So 200,000 every year for 4 years. So we will have to get the present value of 1. Okay? Pero unsa man? The present value of 1 or the present value of ordinary annuity of 1? So take note, pag present value of 1 lang, it only refers to a lump sum payment. Pero, pag present value of ordinary annuity of 1, then it refers to installment payments. Now, since this 200,000 is to be paid annually, that means installment every year. So, we will use the present value of ordinary annuity of 1, which is 3.17. So, sa atong buhaton, 200,000 multiplied by 3.17. Okay, so 200,000 times 3.17, so we have 634 pesos. I mean 634,000 pesos. Okay, so that's it. And then we will get the total amount. 100 plus 634, then this is now the present value of all payments or the cost of the machinery. Okay, so that is now 734,000. So debit 734,000. Okay, now how about the cash? The cash is the down payment of 100,000 and the note payable. So, ang note payable has not the present value but the total of 200,000 times 4 annual payments. So, that is 800,000 pesos. Okay, dili ang present value niya ha. Okay, but the face value of 800,000 pesos. Now, pila man ang atong discount of note payable? So, di ba kaganiha? To get the discount of note payable, that is the installment price minus the cash price. Now, karon, saan man nato? Installment price minus cash price. So, of course, the installment price is total nilang duha. Okay, same thing kaganiha. That is 800,000 plus 100,000. That is 900,000 pesos. So, pila man ang cash price ron? Take note, wala may cash price. So, we will use the present value. So, that is the 734,000. Okay, so pila man ang ato ang discount on note payable? 900 minus 734, so we have 166,000. Always make sure that the debit and credit are equal. So we have 734 plus 166, that is 900, and 100 plus 800, that is 900,000. Okay, so this is how you do the journalizing and computation of the cost of machinery whenever the cash price is not available. You just have to get the present value of all the payments. Okay, so this is the journal entry on the date of acquisition. Okay, now how about on the date of payment? So let's say the first installment payment. So, the first installment payment, same thing kaganiha, that we have to debit note payable and credit to cash. Okay, pila ang bayaran every year? Ang bayaran every year is 200,000. So, 200,000 and 200,000. Okay? Alright. Now, how about for the amortization of the discount? So, it is this time class nga atong amortization of the discount would now be based on the percentage that is given. Unlike kaganiha, walay gihatag interest rate. So, we use the outstanding balance method. Karon na naman tayong interest rate which is 10%. So, we are going to compute for the amortization of the discount using that 10%. Okay? So, unsaon na nato? We are going to make a table. So, actually, for the first installment payment, no need naman unta ang table, no? Kay first installment man siya. So, just like this one. Nga nila siya. Debit, interest, expense, and credit, discount, on note, payable. So, nga nila siya class. You will get the present value of the note, which is the 634,000 kani, 634,000, and then multiply it by 10%. So, you have 63,400. Okay, ingana lang siya. Okay? So, first year pa man ni siya. So, dali ra. Diba? Pero, how about sa succeeding years? So by that, unless you are really very, very expert, dili na ka mag-table, but it is advisable still to make a table. So let us make a table. So we have the year, the payment. Okay? So in that payment, naay portion nga ma-apply sa interest and naay portion nga ma-apply sa principal. And then, the carrying amount of the note or the present value. Okay, so we have year 0. So year 0 is the beginning. Then we have year 1, year 2, year 3. And I think this is 4 years. So, up to year 4. Okay. Now, let us compute for the amortization. So, in the year 0, at the beginning, the present value of the note was still kaniha, the 634,000. Okay? 634,000. Now, year 1. Pagka year 1, nanay payment, no? Dili kani 100,000 ha, kay down payment, wala siya ilabot sa 634. Focus lang ta dire sa note payable. So, ang first payment is, diba, 200,000 per year. So, the first payment is 200,000. Now, take note class, kanang 200,000 nga payment dira, actually 200,000 na siya every year. Now, take note, kani nga 200,000 payment, that will not only constitute the principal, okay? But it will also constitute the interest. So, kaning 200,000, both ni siya nag-compose sa interest and sa principal. And take note, ang present value, it only refers to the principal. Okay? So, mga ni siya ang principal. Now, pila ang atong interest? So, pareha ani kaganiha. Giunsa ni nato, we have 634,000 times 10%. And that is 63,400. So, if the 200,000, 63,400 ang mo apply sa interest, so pila ang sa principal? 200. 63,400 man sa interest, so ang principal is 136,600. Now, kay kaniman ang nakuha sa principal, take note ha, nakuha sa principal is not the whole 200,000, but only 136,600, since again, the 63,400 applies to the interest. So, 136,600 ang nakuha sa principal, so therefore, 634 ang present value, minus ang payment ng 136,600, so we have 497,400 as our balance at the end of year 1. Year 2, okay, year 2, mag-base na po ka sa previous balance. So, 497,400 times 10%. So, you have 49,740. Principal, i-minus 200,000 minus 49,740. So, you have 150,260. Present value, 497,400 minus the principal, you have 347,140. Okay, sa year 3, again, latest present value times 10%, you have 34,714. For the principal, 200,000 payment minus the interest of 34,714, you have the principal of 165,286. So, 165 ang madidak sa principal. Therefore, 347 minus 165, you have 181,854. Okay? So, class, since this time, this is now the last, no? If you're going to just copy the formula, it will give us a balance of 39. Okay? But this is actually due to our rounding off. Since kaning pagkuha na to sa 3.17, gi-round off mo na siya. That's why na ay gamay nga balance. So, para mawala ng gamay nga balance, what are we going to do is to work it back. Okay? So, since year 4 naman dapat 0 na ni. No? Kaya humanan na mag-pay tanan. So, 0 na. So, para ma-0 ni, pila dapat ang atong i-deduct sa principal? It will be equal to our latest balance, which is 181,854. So, ang interest na lang dayon ang mag-adjust. So, 200,000 minus 181,854, you have 18,146. Okay? So, class, if you're going to get the total of this, such as this one, you will actually get, kaning total principal, you will actually get 634,000, which is equal to the present value from the very beginning. And for the interest, if you're going to total everything, you have 166,000, which is actually equal to our discount on note payable. Okay, so I hope sa ato ang pag-connect sa mga balances, you will be able to understand kung aha sila napadulong, kung giunsa sila, o unsa ang iyang application. Okay? So that is for the installment acquisition whenever there is no available cash price. For the succeeding years, such as second year, third year, and fourth year of the installment payment, just follow this one. Same lang gihapon, 200,000. But as to the amortization of the discount, maglahi-lahi na siya, depende sa interest nga na-compute nato every year. Okay? And I hope you understood the discussion. Okay? For further understanding, let us try another problem. Okay, so we have here Braggadocio Company. Okay, so class, take note that when you read a problem, you first have to read the requirement or the question. Because if you're going to read the question first, then you will already know, or you will now have a picture on what are you going to need as you go along with the problem. Okay, so let's read the question first. Now, what amount should be capitalized as cost of the machine? So, sa lagi pangutana? The cost of the machine. Okay, so take note, installment acquisition ta, so we have to determine the cash price equivalent. If wala cash price equivalent, then the present value of all payments. So, in August 1, Braggadocio Company purchased a new machine on a deferred payment basis. So, meaning giutang. A down payment of 100,000 was made. Okay, down payment is 100. And 4 monthly installments of 250,000 each are to be made beginning on September 1. So, monthly ihang payment, 250,000 per month, and then 4 months. The cash equivalent price of the machine was 950. Good thing there is a cash equivalent price, because for that we will no longer have to compute for the present value. And the entity incurred and paid installation cost amounting to 30,000. Now, what amount should be capitalized as cost of the machine? So simple. We just have to determine the cash price equivalent, which is, in this problem, that is 950,000. But take note that as to the elements of cost of the property, plant, and equipment, it will not only constitute the purchase price but also the directly attributable cost. And in this problem, we paid installation cost amounting to 30,000, and installation cost is a directly attributable cost. Therefore, we will have to add here an installation cost. Okay? For the amount of 30,000 pesos. So, if there is no other directly attributable cost, then you just add, and then there you will get the total cost, or let's say cost of the new machine. Okay. So, simple as that, right? No? So, you have 980,000 is your answer. So, basically, when we will have our, or you will answer a problem, no, ganira kagamay ang iyahang solution. But for you to have an example again of the journal entry, no, para dili ta malimot, balik-balik ko na to ang journal entry. So, it would be a debit to machinery. Pila man? Kanina dayong 950,000. Okay? Credit to cash. Pila ang iyahang down payment? Kaning 100,000. Right? And note payable. Okay, for the note payable, so we have 250,000 man na, and that is 4 months. So, we have 1 million. Okay, so pila ang ato ang discount on note payable. So, actually, the discount on note payable is the installment price minus the cash price. So, how may installment price ani? Di ba ang total ani mo man ang installment price? So, 1 million plus 100,000. So, 1,1 ang ato ang installment price. And the cash price is 950. So, therefore, the discount is 150,000. Okay? So, that's it. So, actually, this is not actually needed in the problem anymore. But just for you to remember the journal entry, then I am presenting to you the journal entry on the date of acquisition. As to the subsequent dates, such as the date of payment, then kamo na bahala. You may also practice it on your own, based on my discussion on the previous problems. Okay, kay kanisha class, this is, kuan man ni siya, na given nga cash price equivalent. So, walay interest rate. So, when you compute for the interest expense to be amortized every month, then you will have to use the outstanding balance method. So, just refer to my previous discussion for the outstanding balance method of computing the interest expense. Okay. But actually, this is September, no? September, October, November, December. Actually, by December, mag-end na siya. Ma-full na. So, actually, dili na siya, kung hunahunahon bitaw na to ni, dili na siya kinahanglan nga mag-compute sa outstanding balance method. Kaya nga naman, class, kay pagka-end of the year, take note, mag-compute rabiya tag interest every end of the year. Diba? Adjusting entries na ninyo sa inyong basic accounting. Mag-compute ra og interest every end of the year. So, in this case, pagka-end of the year, fully paid naman. So, unsay mahitabuan na? Pagka-end of the year, debit interest expense, credit discount on note payable, tibuok na nga 150,000 ang atuang ma-compute. So, debit, interest expense, credit discount, o note payable, ang whole na nga 150,000. Nga naman, okay, again, it's because end of the year naman good ni nato siya buhaton, kani, end of the year. Okay? Although, ang iyahang payment is every month, kani siya, actually, end of the year na ni siya. So, therefore, no need na nga mag-amortize. Okay, so if you will be asked pilang interest expense for that year, then you will answer 150,000. Okay, kay mahuman na siya pagka end of the year. Kay monthly raman niya siya. Okay? So, that's it for this problem. Now, let's proceed to the next problem. Okay, so we have Storm Company. So, I will just delete this one. So, this is the journal entry on the date of acquisition. And then, for the journal entry on the date of payment and katong amortization, kamo nang bahala. Kanina acquisition. Ako ang gidelete kay para dili mo maglibog. Nga katura ako ang gibuta. Okay, but I hope you listen to my discussion. Okay, now let's proceed to Storm Company. So the question is, what amount should be capitalized as cost of the machine? So again, another problem with regards to the cash price equivalent. So I know, hopefully by this time, kabalo na mo unsay buhaton. Ani nga problem. So Storm Company purchased a new machine on October 31. A 120 down payment was made and 3 monthly installments of 360,000 each are to be made beginning on November 30. The cash price would have been 1,160,000. Okay? Cash price would have been 1,160,000. So this is the cash price equivalent. The entity paid no installation charge under the monthly payment plan, but a 20,000 installation charge would have been incurred with a cash purchase. Now, what amount should be capitalized as cost of the machine? Of course, so na pagduha-duha, that is the cash price equivalent. So, the cash price equivalent is 1,160,000 regardless kung pilang iyahang actual na gibayad. Okay, now class, take note ha, nga kinahanglan ang atong basihan is the cash price. Now, accordingly, wala mo daw siya nagbayad og installation charge. But if ever, ihatong gi-cash price, makabayad siya og 20,000. So therefore, this 20,000 is a necessary cost, okay, or a directly attributable cost for the installation or acquisition of the machine. So we will have to add an installation cost. So that is 20,000 pesos. Okay, so we have now the total cost of the machine, which is 1,160 plus 20,000, so we have 1,180,000. Okay, so same lang kaganihan, diba? We simply add the cash price equivalent plus the installation cost. Okay, so take note, we have to refer, or we have to base the cost of the machine on the costs if ever atoa siyang gi-cash. Okay. Now that's for the storm company, and let's proceed to the next problem. So we have character company. So the question is, what is the capitalized cost of the equipment? Character company purchased equipment by making a down payment of 400,000 and issuing a note payable for 1,800,000. A payment of 600,000 is to be made at the end of each year for 3 years. The applicable rate of interest is 8%. The present value of an ordinary annuity of 1 at 8% for 3 periods is 2.58. Shipping charge for the equipment of 200,000 and installation costs of 350,000 were incurred. Now, what is the capitalized cost of the machine? So, since in this problem class, there is no cash price equivalent given, so what are we going to do is to compute for the present value of all payments. So, pila man ang present value of all payments? So, first, we have the down payment, which amounts to 1,800,000. Okay, now, next is the present value of the note na dayon. So, pila ang present value of the note, diba? We have to pay 600,000 per year times the present value of ordinary annuity, which is 2.58. So, how much is that? So, we have 600,000 times 2.58. That will give us 1,548,000. So, pila nga to ang total present value? That is 1,800,000 plus 1,548. We have 3,348. But take note that aside from that, okay, I'm sorry. I overlooked, or I mislooked it. The down payment is not the 1,800,000 but the 400,000. So we will change it to 400,000. So we have 1,948 as the total present value of all the payments. Now, since we also have a directly attributable cost of the which is the shipping charge and the installation cost, so we also have to add it in our cost. So we have shipping charge, which is 200,000, and installation cost, which amounts to 350,000 pesos. Okay, so how much is now the total cost of the equipment? For the total cost of the equipment, we will have to add the 3, so that is 2,498,000. Okay? So, you just have to get the total present value and add any directly attributable cost that is given in the problem. If wala po directly attributable cost, then the total present value is already our answer. But since naaman tayo directly attributable cost, then we also have to add them, since these are costs that are necessary in bringing the asset to its present location and condition. Okay, so for the next problem, I had a mistake because this problem is, I think, this is just the same problem sa katong ato ang example. Same lang sila. Enrich company. So, we will no longer answer this one since nabalik na siya. Okay, so that ends my video. I hope you understood. If wala, then you are always free to replay this video. If ever you have questions nga wala na answeran based on my discussion, then do not hesitate to ask me during our meeting, during our video meeting. Okay, so I hope that by this time you already know how to compute using the installment acquisition. So that ends my video. Thank you everyone for listening. Have a great day, and I hope that you study well. Goodbye.